How's it, guys? It's Linton here. So let's chat about what happened with the Federal Reserve meeting yesterday. So the Federal Reserve increased interest rates by 50 basis points or 0.5%, which was the largest move since 2000. So over 2 decades in time that it's taken for them to increase by 50 basis points. This is obviously in an effort to tramp down the inflationary pressures weighing on Americans, as they say here, because with inflation comes problems. So they need to bring the inflation levels back down. Um, but what do we need to note about this? And what we need to note is what I mentioned in my analysis yesterday, is that rate hike was already priced into the market. So this downtrend over here and this downtrend over here had already priced in that move into the market, or that 50 basis point hike. And I mentioned yesterday that if we see anything above the 50 basis point hike, that will be negative for the indexes, in my opinion. So we saw the 50 basis point hike, and we've seen quite a strong bullish move from there. Um, what what I want you to be careful of is to not get caught up in all the hype. Everybody's saying it was only a 50 basis point hike, and now this can be the reversal in the market, and we're going to see the uptrend resume, and the price is just going to rip up from here. That is possible, but it doesn't mean that it's definitely going to happen, guys. And remember, we closed below a significant Fibonacci retracement level over here. Um, so I'm keeping my eye on that. And if you look at the overall trend, we are getting lower highs and lower highs, lower lows, lower lows, lower lows, and lower lows. So the trend is, in fact, still down. Um, how do we know when the trend has reversed back to the upside? We've got to see the formation of a higher low. So a low that's higher than this level. We need to see price move up, pull back, form a higher low like that. And once we break this higher high, uh, it's a lower high in terms of the bigger time frame. But because of these lower highs over here, this was a higher high in terms of my context. And once we break that level, get a higher high formation and a higher low formation, I'm happy to say that the trend has changed in the up direction. Remember, the market works in corrective levels. And so far, this correction has broken the 20% correction level. So this is 10%, 20%, and 30% from the all-time high. We have broken 20%, and like I mentioned, very significantly to me, is we broke below this 38.2 fib retracement level. Generally speaking, what that means, especially on big time frames like the weekly and the monthly as it did, is that we would see the next level. So this, for all intents and purposes at the moment, this move here, bear market rally. Um, so it would be offering opportunities to actually get short in the market. If you go back down to the daily time frame, let me just remove these drawings here quickly. I believe that it's quite possible that we will see some consolidation around this level over here. We can see that it's a very strong level of support and resistance, so we could see the formation of this corrective structure and then a break to the downside down to this 50% retracement level on the Fibonacci, which is what I've got marked here. And that would then give us this three-wave move that I've been talking about for probably more than a month already, saying that this is on the cards. In fact, it's definitely more than a month. 1, 2, 3, 4. Yeah, this is week number 5. When we hit this level over here, on a smaller time frame, it was a 61% retracement to the upside. I said we can start looking for the second wave down. I wasn't convinced that this was a three-wave correction, and I believe that we could start looking for the next wave to the downside, which I believe is still going to play out to the 50% retracement level over here. From that point, I'll be looking for a move up. What I want to see is the formation of a higher low, a higher high, and then we can start seeing the price break. And once it breaks this high over here, um, we definitely we're definitely heading for higher numbers. 17 and 18,000 are on the cards. I hope that helps with the analysis. If you like this video, give it a thumbs up, subscribe to the channel, and stay up to date with all of our releases. Cheers.